today's closing bell exchange. We want to know if this momentum is going to stay for the long haul, or will this rally come to an end? An abrupt end is what Daryl Jones of Hedgeye is expecting. He says he's shorting the S&P 500 in this strong market.
So what does the rest of our panel have to say? Along with Daryl, we've got Lee Munson of Portfolio Asset Management, and our own Bob Pisani, and Rick Santelli. Well, why don't we start with you? Lee, do you agree with Daryl? I mean, he's shorting the markets.
No, I don't see any reason why you'd be doing that. I mean, right now we've got pretty decent valuations. I mean, even China is cheap right now, but I don't think the S&P and shorting it's the way to go. I think investors, if anything, they just need to look at some of the relative value between expensive telecoms at a very high valuation and cheap tech. I guarantee you one thing. Tonight, I don't think Microsoft or Google is going to blame a fiscal cliff for bad earnings.
That's what Morgan Stanley blames. Well, you know what? Look, it is creating uncertainty. So I guess, you are seeing that uncertainty in the form of, not a lot of activity in terms of people putting new money to work. Yes, we've got a strong market, a couple of days that we're seeing money move, but you're still seeing very, very light volume.
Well, I would agree that the light volume is a problem, but still, there's so much money seeking out those risk-free treasury rates. There's so much money seeking out high yield and intermediate government bonds. I think after we get through this earnings season and we only have a few people giving excuses about fiscal cliffs, I think the fiscal cliff is going to turn out to be like Eurozone headlines for the first half of this year. It's a great thing to get me into a position. Maybe it might cause some short-term downdraft. But after a few weeks, this fiscal cliff, I think by next year, it's not going to be a big deal. But hey, use it to trade, use it to get in your positions. Don't use it thinking you're going to make a ton shorting.
Daryl, the fiscal cliff is not going to be a big deal. That's what Lee says. Do you buy that thought, and why are you bearish?
Well, number one, the key reason we're bearish is because complacency has set in again. The VIX near level 15 has consistently signaled the market top over the last 3 years. That's where we're at. The European headlines have kind of gone away, so volatility has declined. But the reality is, number one, Europe is continuing to get worse. And number two, you have this major headwind to GDP growth in terms of the fiscal cliff looming out there. So, once again, you can trade equities, but we're short because complacency is very low, and there are a lot of major headwinds in front of us.
So, Daryl, let's talk about sort of how you see this playing out. You're expecting a sell-off. How significant a decline, and where will the leadership be on the downside? What are you shorting specifically?
Well, number one, yesterday in our model portfolio shorted the broad market. We've been pretty negative on the commodity sectors. We think what's going to happen is there's going to be dollar strength, which will deflate commodities. And at the same time, commodities are really driven by global growth. We think global growth is going to continue to slow, in particular in the U.S. with the fiscal cliff. So collectively, that's bad for commodities as well, and that's another sector that we would opportunistically short.
Rick, usually all I have to say to you is discuss, react. How do you discuss? How do you react?
Well, I think in the risk parameters that our guests are outlining, they're pretty accurate, and the bond market backs that up. If you look at, we've now had 11 straight sessions starting on the 5th of July that have closed under a 160 yield. And out of those 11 sessions, 4 of them have closed under 150. So it's hard to think that the Treasury market is looking at anything other than the fact that risk is something to be avoided. We had a record negative yield on a 10-year TIPS at minus 63 basis points. The last TIPS issue never had a yield that wasn't negative. We see yields negative all over Europe. The only thing you can say is there's a nervousness there, but listen, I'm not following the stock beat, but the money has to go somewhere. And treasuries and maybe U.S. stocks may look a lot better when Europe starts to look a lot worse again at some point in the next couple of weeks.
Look at the deep cyclicals, though. I mean, you really want to be shorting the S&P and the broad markets. I mean, there's such value right now in the deep cyclicals. Even a guy like me can get pulled in to a Caterpillar versus an expensive AT&T or Verizon. Yeah, I think people, they don't understand the avalanche of money from treasuries.
Just to interject for a second, I think this is the exact wrong time to buy cyclicals. If global growth is slowing, Caterpillar is probably the last stock you actually want to own, particularly if China slows, because the Chinese government have effectively said they're going to slow. So to play deep cyclicals at this point is really the wrong call.
Bob, what are you saying
please,
today?
China's already discounted. I mean, how much more discounted do you want to make? It's 20-30% cheaper than the other emerging markets. I mean,
this is like talking about,
sometimes cheap stocks get
cheaper,
value traps
right?
are a good point, Maria. Well, I think if you're in a value trap, I think if you look at the standard deviation, if you just look at the valuation historically, I think one can make the case, clearly not a Hedgeye, that there's a certain point where things are at extreme reading relative to other emerging markets. We have that extreme reading right now. Hey, believe me, 3 or 4 months ago, I wouldn't have touched China. Now I'm into it. I like it. I want to get that 8 times multiple. You know why? Because people know that China's lying about growth, but that's news from 3 months ago, not today.
So you better hope they're going to get their infrastructure project going, because it's not looking particularly great right now.
Right. It certainly has slowed down. All right, thanks, everybody. We'll see you soon.